This is Captain Anil Singhu, and today we are going to discuss typical chart pattern which Nifty has formed recently. This is called head and shoulder pattern, and I've been getting many queries and many questions from people in the group as to what is the significance of this particular chart pattern, and that's what we're trying to do today. If you see, Nifty has formed this typical chart pattern in which looks like some temple dome, in which it has gone up, come down, gone up further, came down again, again went up, and then coming down again. This particular chart pattern is called a head and shoulder pattern. If you go to any charting software, you go to TradingView or even Zerodha, wherever these market charts are present, you get a symbol for this, and this is a built-in pattern which can be drawn on the price action candles. So if you see here, I am in Zerodha charts, and in the patterns we have this head and shoulder pattern here. I will just show you how this pattern is typically drawn, and then later on we go on to see the significance of this pattern as to why it is important at this stage, and also we'll go back into history and see uh, 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 some other patterns, the same pattern which has been formed by Nifty in the recent past, and whether or not the pattern were respected, and the targets uh, which were indicated by the chart pattern, whether they were met or not. So this will be a good exercise for us to understand uh, uh, the target levels where the Nifty is heading right now. It may or may not achieve those targets, but this is at least uh, apparent as of now from the way the market is moving. So now if I pick up this symbol of chart head and shoulder pattern, it's typically drawn in the manner like I'm going to show you now. So in the current market scenario, I go up, I touch this high and come down here, then go up again, touch the high that Nifty has made, again come down, go up and come down again. So what we get is a beautiful chart and head and shoulder pattern here, in which we have the left shoulder here, we have the head, and we have the right shoulder. Now the significance of this pattern is that after this particular dotted line is called a neckline, and the significance of the pattern is that after this neckline is breached, then we have some indication of the target to which the Nifty can fall. But for doing that, I'll just take the arrow symbol from here. Let's put it here, bring it to the line, neckline here, copy and paste, pick up the second symbol and keep it at where the neckline was breached. So what we get here is the target level till where the Nifty can fall. So if I draw this line here, so I see somewhere here, if you see, it's on 23033, that is the level. So that's the level which the current chart pattern, that is head and shoulder right now, is indicating where the Nifty is going to fall uh, after this neckline is breached, which has actually not breached today. Now, if you see carefully, there is a support here, somewhere here, which is at a level of 23,100 or thereabouts. So it is a good indication that after this, the Nifty might come down and eventually touch this level before reversing and going up again. Now, once again, this should not be taken as an investment advisory. This should be taken only for the academic interest. We are trying to understand this particular chart pattern here, which is formed by Nifty. And now we'll go back in past and see as to on which all occasion this pattern was formed and whether or not the target which we try to indicate here, which the pattern is showing, whether or not the target was met in the past. So I have already drawn this pattern in the past. I've done some homework and I'll be showing it to you. So as we go back, we find a similar pattern which was formed somewhere here. Now the date here is 15 September 23, and the pattern is shown on the chart. So it went up, came down, went up again, came down, up and down again. Now here, uh, the target level which was indicated was somewhere around 18,400. However, Nifty reversed from halfway through, and actually the level which it went to was 18,839, which is shown here. Now, if you would see, this level is almost halfway down the target which was indicated by the seller. So this typically happens that when because of some strong push which comes in the market will find a support somewhere and will turn from there. And but typically it will fall after breaching the neckline. It will fall up to at least half the level where it has, which was indicated by chart pattern. Now, if you see, if I go by the price header here, so the typical fall before the neckline was breached was around 4.6%, and thereafter it went down to somewhere around 6.6%, the total fall before it reversed. So you can see it is down 1.5 times what was indicated by the this chart pattern here. So typically, in majority of the cases, most of the cases, the fall is double the amount. Like I said, just a clone of the arrow after the neckline is breached. That means if the index has fallen by 5%, at which point the neckline was breached, then the total fall would be somewhere around 10%. Okay, so now we'll go further, and in this case it was only 1.5 times. So now we'll go back in past and see some more examples. Now if you see here, this date is December 22. Now I have already drawn the head and shoulder here, and if you see here, the fall was predicted pretty accurately by the chart pattern. So this is the arrow. When I clone it, it comes here, and this is where the Nifty actually fell to. Now, if you see, level was 17,773, and the low which is there is somewhere around that only. So in December 22, this low was reached after the Nifty started falling on 1st December. By 26th December, in a month or so, Nifty had achieved the target which was indicated by head and shoulder. Going further back, so this is from the previous pattern, so I'll move this line here. Now coming back here, we reach October 21. Here again, you see the pattern shown on the chart on the screen here, and the fall which is indicated here and has been accurately predicted once again by the chart pattern, which came to somewhere close to 16,500. And if you see, in fact, the index fell to that level. It went down, further down, but it closed close to that level, and thereafter the market reversed again. Going further back, so there are many examples. So basically what happens is a typical head and shoulder pattern is formed after the market reaches a high. So it is formed on the way up, and thereafter when a head and shoulder pattern is formed as the market is going up, there typically is the situation wherein the market will fall to the target level which is indicated by head and shoulder. Now, if you see here, in this particular position also, we can have some kind of head and shoulder getting formed. But you see here, this is a kind of distorted kind of a structure. It is not very accurate. But still, it is there. We can still see a head and shoulder here, although the left shoulder is much lower. They should be almost at the same level, both the shoulders. So in this case, it's a distorted image, but still, if we take this structure also and try to see the target level indicated, it will come more or less to a level which has been shown by the chart pattern. Now, like I said, if the structure is distorted, the target may not be that accurate. Let's see if I put it here. Yeah. So from here the neckline is breached. So if you see, it was indicating the target to be this support which is here. However, typically like it happened last time, it fell about 20-50% of this arrow here and reversed. So like I said, the targets we typically achieve in case of head and shoulders are either the 50% of the original fall or the or equal to the fall which was seen before the neckline was reached. So going further back, now this is a fall of uh, uh, February 21, 20, the COVID situation. Here, the pattern is not very clear because this was an unprecedented situation wherein the market fell because of totally different reasons. So, the extent of fall was very difficult to envisage here, very difficult to judge. And this particular pattern, I cannot find a kind of head and shoulder structure which could actually predict the target in this case. But if you go back, here again, this is happening in June 2019. We have a head and shoulder being formed. And again, if you see the target, which is here, then I clone it here and put it. It is precisely at the level which has been, it is actually looking at this particular support as a target, and if we almost came to the level and went back again, reversed. It came actually twice to the table almost there, and thereafter it went back. So there are many examples here again. If you see, this is the head and shoulder which has been formed in August 2018. Target level which was indicated was close to a support level which was 9964, and Nifty actually fell somewhere close to 10,000. Again here, if you see, this is a typical case again once again where the 50% of target was achieved. Going back again, a very precise in September 2016, the target which has been shown by head and shoulder has been met by Nifty. And here again, if you see, this is in March 2015. This is the target head and shoulder pattern which is formed here. This is a target which was achieved precisely by Nifty before it reversed and went back again. Again, May 2013, I would, this is what I have drawn here, but I'll show you again with the help of the indicator. It goes up, comes down here, touches the upper portion, comes here, right shoulder and down. And if you see, this is the target level which was indicated. And when you put it here, where the neckline was breached, you'll find the first time around it turned back from about 50% of the level, and thereafter went all the way up and came down again to close to a target which was indicated earlier. So even if I take the second head and shoulder here, if you draw a line here, though it is not correct because head and shoulder is typically formed when the market is going up. So in this case also you can see the trend is almost upwards only because this high is higher than this. So if I draw a line here also and try to put a target here, and just take it here and put it with the neckline of beast, it was somewhere close to this. Yeah, so not very precise because it is not a typical very good head and shoulder which was formed here. Though in this case, if you see, this was correct because Nifty has been rising, and thereafter it made a head and shoulder and fell. In this case, it has come down. It is not rising; it is a falling trend. Then it went up again. So it is not very precise. So we can disregard this particular instance here. Again, a very good example. If you see in November 2010, Nifty went up, down, head, right shoulder down, and what you get here is a precise target which is achieved 0.170. So if you see there are and again even 2008 uh, the big fall which happened, it was precisely indicated. The target was indicated in the label with the help of head and shoulder. If you see here, this particular target has been cloned to be put here. Okay, so the level which was the Nifty when this thing started off, Nifty was at a level of 6321, 6,300, and eventually fell to level of 2550, more than double. This was very accurately predicted by the head and shoulder structure. If you see, the fall till the neckline was breached was around 20%, 28%, and thereafter, when the neckline was breached, eventually Nifty came to around 60%, which is double the amount of the first fall which happened. So now, if you can go back also and find many examples, you would find, for example, here if I take this example also, when the Nifty has been rising, it goes up, makes a shoulder here, goes up again, maybe somewhere here, down, come back here, structure is formed, and when you see the target here, so actually in this case, maybe somewhere here, okay, can you come somewhere here, and when you try to see the target, it will be about 50% of what was indicated, because actually the neckline was breached somewhere here, right? It breached here also, but then went back. So again, the target is around 50% of this length of the arrow. So one thing is very clear. So and also you will find that the target is reached when a support level, like in this case, the support was somewhere here. So Nifty came to almost this level and went back from here. So if I was watching this chart carefully, studying this chart carefully, I would have seen that the previous support was somewhere here, and so there was a good chance of Nifty reversing from this level rather than coming to full, level below, which was indicated by head and shoulder. So if you see, this particular chart structure predicts the target level to be reached by Nifty pretty accurately. If there are two levels which we have seen, which are typically met target levels after the neckline is breached. One is the 50% of the original fall till the time the neckline was breached, half of this arrow here, and or it is equal to the actual fall, which is indicated by the target arrows here. So now what we are seeing, coming back to the current situation, what we are seeing right now. So this is about the chart, how the chart looks like, and I've taken numerous examples. If you see, this chart has got how many? Around more than 10 or 15 examples I've taken here. And, so, oh, there are quite a few. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, around 12, 13 examples wherein the targets which were predicted by the head and shoulder chart pattern structure were totally met by Nifty. So, having said that, so we are at a situation now wherein the neckline of head and shoulder has been breached by Nifty. So this candle is a pretty big bearish candle, and if I see the volumes here, okay, so I will not get the volume for Nifty maybe, yeah, not for Nifty chart. But then, this is a very decisive kind of a breach which has happened here of the neckline. And if I go and see MACD, it has gone down much below zero line and made a hook downwards, which is not a very good sign. And also, if I see the RSI levels, RSI is gone below 40 here, the precise moment. So there are all indications that Nifty is now looking at a bigger fall in the days to come. Now, how much time it's going to take is only God knows. But if you see here again, we have one particular level, support level, which is somewhere here. If I put the arrow rightly, right location here. So first support level, which is coming is halfway mark at the halfway mark of this arrow, which is at around also the base of this, the low of this candle here, which is 23,893, 23,900. The first level, which can be achieved, which is most likelihood will be achieved by Nifty in maybe by this weekend only, if it continues to fall. And thereafter, if it reaches this level, then the next level which is going to touch is 23,000. This looks very, very. This is pretty clear right now. Unless something drastic happens and Nifty changes course from here itself, I have no doubt that this particular level, which is indicated by Nifty, is going to be achieved anytime. We cannot predict the time, but it's going to be achieved by in near future. So even if I draw some trend lines here, they also indicate that the level we're looking at, 23,000, is pretty accurate. So if I draw a trend line from here, maybe from the side, from here to touching this low, it precisely comes to the same level wherein we are looking at our target of head and shoulder. So even if I take this further, I take a longer time frame for drawing a trend line, I get a similar structure once again. So even if I do this and draw to draw a trend line which is somewhere from here, so what I get is a similar structure, similar kind of support, which is here, plus minus, maybe go further up and touch somewhere here. So what we're looking at is a level of 23,000, which is looking very much likely for Nifty in the future. What we can do when we face this scenario like this, well, those of us who are into FNO, there's an option. We have one particular option is to sell some Nifty calls or short some futures if you want. And let's say if you sell the call of 25,000 CE of October, and when the Nifty falls, it will give you some cushion against the loss you're going to incur in the equity holdings. But then again, like I said, it is not a advisory. It is just for academic interest that I covered this particular chart structure here and try to give you an idea as to where we're heading in Nifty in the future. Thank you very much. This is Captain Anil Singhu signing off from here. And if you have any specific queries or questions, you are most welcome to ask me in the group or on a DM. I'll be very glad and happy to answer those and try to give you some sense of the chart structure the way I see it. Thank you.